All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday, May 3rd, 2023. Happy Fed Day to everybody. Today is the FOMC rate decision. The expectation is a 25 basis point hike. That's the expectation for today. But in terms of what is going to happen after, then no one knows. We don't know if it's going to be a hawkish pause or it's going to be a dovish pause or if we're even going to have a pause. Who knows? Again, all you could do is play the reaction or just wait for it. That's really all you can do this morning. Dow futures down about 2 points. Nasdaq up about 12. S&P is flat. I did have S&P 500 futures running. We just moved the stop about 20 minutes ago. No, about 40 minutes ago. We moved that stop to 41.38. So we're about to get stopped out here for locking of 20 handles as we pulled back a little bit, as you can see. We were at 41.50-ish, pretty close to it. Our target was 41.60 TP. But again, we were just moving the stop, and we got in at 41.18 yesterday on this bounce right around that 4100 area. Let me go ahead and zoom into that. You can see that 4100 area held. I marked that line in yellow. And the reason I marked that in yellow is because that's the support really from the beginning of April. So if we would have sliced below 4100, fine. I would have just not signaled that long, but the idea was to play the turnaround. I also tweeted about the put call ratios yesterday on Twitter. Again, it seems that everyone seems to be chasing these short moves. And again, when you have same day VIX expiries, when you still have same day SPY, same day Qs, you get the crowd following every kind of move, whether it's up for a breakout or down for a breakdown. So we just played the reversal and we did pretty well. So well done. We didn't get stopped out yet. It's at 41.40. We are about 2 points away from that. But again, that's at profit. So 20 points on S&P 500 futures, at least locked in on that bounce here around that 4100 zone. We got in at 41.18. I was looking at NQ NASDAQ futures to get above 13.2 and maybe see if I can get a little bit more to get to 250, maybe 300 if we got a little bit of a boost. That didn't happen, so I didn't fill. But that's where we are this morning, at least on equity futures. Here's the breakdown on the Discord. I went ahead and explained it here, keeping it tight with the stops, 41.18, 40.95 SL, not that much of a bad drop either in terms of an SL, gave us a little bit of room. But 41.60 was a target. We may not get it. We may not get there ahead of the Fed, but at least we'll have the stop. It's moved, it's flat. I mean, it's 20 points, so again, we can ride the wave, kind of like the runner deal. So we also trade futures too. So again, when you have a little bit of choppiness, you get a little bit more of an opportunity. You get more control, especially overnight. Here was the chart on that. I think I sent it out. Here we go. So this was at 11:47 a.m. I said we wicked 4100 here at 4104, which looks to be a support zone for the bulls, at least on the 20-day chart. Again, the beginning of April. 4150 has been that magnet line for ES. I talked about that on the blog. That's what we're looking for. That VIX filled its gap on the 1 hour, rejected. If we get below 18 VIX, which we are now hovering around 18, that should be enough. And pretty much exactly what we expected, exactly what we wanted. But I don't think we may not get that a little more juice just because we're being a little conservative, obviously being with the FOMC. So that's where we are. Great trade yesterday. Other than that, options, I didn't really close anything. Let's take a look at crude rather quickly. Crude, again, we talked about that gap fill. I didn't short crude. I wanted to short XOM. If you guys remember the XOM chart, we talked about that 120 level. It was on the watch list. It rejected it, and it filled that gap. The problem was there was no volume on those XOM puts whatsoever. I was looking at the 110s. It's not be in the money now, deep in the money, but just didn't have volume yesterday enough to trade that XOM play. So I'm kind of kicking myself on it, but XOM is still a great company to own. If you get around the 105 area, again, that's that 200 daily MA, that'd probably be a good place to add some. But on crude oil, the crude oil cut gap was filled. Now you're probably taking a look at testing lows around 65, and we're starting to get close to the summer peak. So I don't know if OPEC's going to cut more production, but it is a very bearish chart on crude oil. I mean, remember we talked about that death cross since last year, and it was going to continue to go down, and it has. So that might be the next shoe to drop. Again, this is a very important chart because if crude oil falls too much, that's going to hurt the labor market, and that's It's telling us that demand is very much so softening. Now that may be good news for the Fed for those who want a pause, but crude oil is telling you a lot of people are not using as much gasoline, crude oil as expected, whether it's for construction, whether it's for driving or for flying. But if you listen to the conference calls from the airlines, demand is through the roof. So, I mean, take that as you want, but we don't want crude oil tanking too far. That's not a good sign either. Good for the pump, but not great for macroeconomics either. It still has to be half and half. Gasoline futures down about 2.25% at $2.38. Silver futures down about 0.37 cents, $3.84 for copper. Euro dollar up 36 pips, 110.36. Not much to do in terms of Forex ahead of the Fed. 135.42 down about 115 pips. 124.96 pound dollar. And again, the Japanese yen gaining, that means bond market is falling in terms of the yield. 3.405 as we continue to fall. The dollar is down 101.59. Good sign for equities at least. Bitcoin is down as well. A little bit of risk off tone. 28,265 is where we are. And 1849, 1,849. Ugh. God, I'm sorry about that. Let me sip more coffee. Ethereum is down 1.31% this morning. All right, that's enough about the macro. Oh, and the VIX. VIX is at 18. We talked about that. All right, so here are the scenarios for the Federal Reserve today. This is the important one. This is from JP Morgan sales and trading team. Most likely, hike and pause. JPM favors this scenario heading into the decision. Here, the Fed would be relying on tightening of lending standards stemming from the banking crisis to act as de facto rate hikes, the firm's traders said. Any language that market interprets as the Fed being on pause should benefit stocks. I agree. JPM sees S&P rising about 0.5%, 1% on Wednesday on this outcome. The second most likely, hike and continue raising rates. That seems like to be, I know we're going to get that rate hike, 25 basis points. If they don't rate hike today, we probably would soar. I don't think that's going to happen. But in terms of dovish or bearish, I mean, that's all about dovish or hawkish. That's about perspective. It really depends on what he's going to say. So what I think is going to happen, you're just going to get a 25 basis points, and they're going to say that we're still on the plan. We're still, inflation is still important. That's what I see. And then 4,100, 4207 ES, the 100-day moving average might be that resistance. But we may get a pop into it initially, may trade around it. But again, unless we get a pause, I don't see us breaking that 4207, at least not immediately, personally. Hike and continue rates, pretty similar to what I expect. JP Morgan says there's a high probability of the central bank raising and hinting at more rate increases. There are 2 consumer price index reports before June meeting. If the Fed does not see this trending lower over the next points, we may see a Fed continue to tighten. The traders said under this scenario, the S&P would fall about 0.75 to around 1.25%. That might get you to around 40.80 S&P, maybe 40.70. Again, I still think a retest of 4,000 is in the cards since May is seasonally weak, seasonally bearish. So this isn't exactly something new. Unlikely, no hike and pause. In financial conditions maintain the spike that they experienced during the banking crisis, then this would be the more probabilistic outcome. To be sure, market would initially cheer the news, expect to rally 1.5% or more. That means no hike and a pause. I don't think that is. Highly unlikely is a rate cut. So throw 50 basis points out the window. You're not even getting that raise. You're just going to get a cut. I mean, 2.5% increase in the S&P. So it seems to me JPM is pretty bullish on this. Again, I don't expect something as trivial as a perspective of what is a hawkish cut, what is a dovish cut. I think that's all nonsense in my opinion because it really depends on what you see. The price action will dictate to us everything, guys. That's really it. And I think 4207 for now, again, it could break. 4207 for now will be the resistance, which is the 100-week moving average. And again, we could test around those levels, but to break above, we would need something great to happen, like a pause. Or Apple swings it out of the park tomorrow. Could be anything. AMD's down pre-market about 7%. Again, I was reading most of the call. I was reading some of the call and the news and the numbers, reading some of the numbers. Their call and their earnings wasn't bad at all. In my opinion, like I wrote to Investment Club, it was just got ahead of itself in Q1. The thing was up 40-something% year to date. And again, that's not NVIDIA numbers. But AMD didn't really change much in terms of what I've seen. I don't think they do much AI, or maybe it's more gaming and stuff like that, which is fine. That's why NVIDIA gets the price premium, because of artificial intelligence. But AMD didn't have a bad call either. It wasn't a Micron call, and even Micron soared. So I think most of the AMD move is really just technical. And I think it's just a pullback just to get you back to that gap fill for the most part, or get around that zone around 75. You're trading around at 83. That might be all of it. It may be 80 is the most, which is the 100-day moving average. That gap fill looms, but even with this earnings, we didn't get enough. So I did expect us to go down to fill that gap. I filled some lottos. I filled a lotto, the 80 puts for this week on AMD. Complete shot in the dark. I went for it, and I'll probably get it today, but it was not signaled. So that's where we are today. I still have Apple calls. Again, we got close to the breakout of 170.32. DraftKings was volatile yesterday. Still holding those. Nothing has changed. Let's answer some questions. AMD not doing so well pre-market. That's correct. What's your call on post-Fed reaction? I think we'll just boost around 4180, 4200 level, kind of lure the bulls in, and then we'll probably fall. Fall again, get back to 4150. It's just going to chop everyone to death. That's what I really think. I think there's just no real direction. Nothing is really clear until we get what the Fed says. Morning, Carlos. What are your thoughts on bank stocks, specifically JPM? Well, JPM, in my opinion, I think everyone can agree it's really too big to fail. As a shareholder of JPM, I love it, but JPM has been trading like crap in terms of volatility. It's going to get above 144.57 in terms of trading the stock. You got a couple of gaps to fill. You got one here at 129.04. I would prefer that we fill that gap and still stay above the uptrend. So again, if we do break below 133, I'll be looking at playing some JPM puts. If we get above 144.57, I will start taking a look at JPM calls, as we have a major gap here at 165. Maybe we trek a little higher there. Next level to buy Palantir. Palantir's earnings, I believe, are next week. You're in a big fat chop range. That's where you are. Nowhere. If you're looking to buy the dip, then you got to get around $7 a share, maybe $7.15. I wouldn't recommend that. I think with Palantir and these high beta names, they need to prove to you to buy. And proving to you is not demand going lower and the stock price going lower. I think the stock price needs to go higher. $10.88. Once you break that gap fill, you're above all major moving averages. That's when I would add to Palantir, but not here. You're just in a big fat range. You're paying just to hold it when you can use that cash and get 5% dividend, 5% CD or yield. So again, Palantir has to convince us. The stock market has to convince us that this S&P 500, this whole big fat range, is worth investing in. And it isn't. It really isn't. It's worth trading in. Don't get me wrong. It is a trader's market. We've been saying that since December. Nothing has changed yet, guys. We are at the same levels we were May of last year. A whole lot of nothing. Take the cash, put it in a savings account, earn your 5%, and call it a day. Better than paying Coca-Cola dividend. You just put it in the bank and just let it return some capital. The problem is that that's probably the peak in rates. So I say, if you got to go for it. I have cash in a Robinhood savings that pays like 4%, Robinhood Gold. Not bad. Pays pretty good yield, and there's no risk on that. I know, FDIC insurance. Risk is always risk. But again, for this, guys, look at this. Do you really want to go ahead and buy the market here? Especially when you're in the top end of this range. And again, we've been bouncing off the same range for 12 months. It is a trader's market. If you hold stocks, great. You can play puts, you can play calls against them, and still make a little bit. But to add investment risk here really doesn't make sense. Now, if you're talking about certain stocks, individual ones, they have ran up a little higher, sure. Apple on a breakout, Microsoft on a breakout. There's more opportunities in the single stock names than there are in the actual index itself, or the index itself, excuse me. So, I mean, here at this point, am I rushing to go ahead and use capital? No, I would not. I think kind of just hold pat, kind of wait to see how things turn out. If we break above the August highs of 4,300, okay, great. But we could tease that. We can get that bull trap to 4,300 and then just wick us down on some other bank failure or some craziness over the summer. Maybe a debt ceiling fight, maybe some geopolitical issues. Nothing has changed as of yet, except the Fed is hiking rates. Now, granted, the labor market is still strong because the private payrolls were double than expected from the ADP number. So labor market's still strong, at least that. Can't have a recession when you have historically low unemployment, but they're showing cracks in the system with banking. And again, we're in a historically levered system, meaning the most debt we've had ever. And I don't know if the Fed still wants to raise rates into that as more and more banks look at the KRB. This is the regional bank ETF. Not great. I don't know how Fed Chair Powell can keep raising rates at this juncture. The political pressures may get to him. And again, we're going to hit a very key trend line on the pretty much the most maximum chart you got. Look at that, 35. Is that enough? Is that enough for a Yellen put, a Fed put there where you start buying? Possibly. Usually when banks get under stress, that's when the checkbooks come out and the money printer comes out. So I would say, at least in the near term, we're probably a little more into the banking crisis, or maybe we'll have another shoe to drop. But how long can the S&P hold with just 8 or 10 names holding up the whole thing? That's the scary part. The good news is that that's great to trade around. The bad news, as an investor, you're big in a big sloppy chop and you're not doing much with it. So unfortunately, I wish I had better news than that, but that's where we are. AMD, what is the best place to add to AMD? I would say the gap fill, right around 75, right here. That would be around a 25% haircut from the recent highs. If you think about it now, we're about near a correction territory around 83. So AMD technically speaking is right near correction territory, or bear market territory, excuse me, 20% from peak. Get a 20% discount from the recent highs back in March. Not a bad place to nibble if you wanted to, but I think 75 you can get right 25% discount. Maybe we get some craziness with the Fed, geopolitical issues, debt ceiling. Again, that'll give you some opportunities that our stocks are pulling back, but still in an uptrend. So again, you still get some momentum just at a cheaper price. So I think 75 is the best bet, JG. All right, thank you guys so much for taking the time out of your day to join me. I will catch you guys tomorrow for the morning notes. We'll recap the Fed, kind of recap the price action and see how it goes. So again, I expect a little bit of a run up into the actual Fed news, depending on where we go. If we get as high as 42.07, I doubt it. More than likely that will reject. I think we'll probably get to around 41.50 and kind of hold pat. And it's going to be a pivot point from either 41.50 onto 40.75 or 41.50 to 42.06. That's kind of where I'm thinking. I mean, if we get a sword job, that's pretty unlikely. A tank job seems to be more likely, and you just retest the lows that we just had back in the end of April, which is right around 40.68. Kind of reset the VIX as it's. Remember, this thing, guys, was at 15 handle. Now it's at 17.93. Maybe get a break above 20 or 21. That seems about right to get the pricing for insuring your portfolio or insuring equities in the right direction. Can't have it too good where everyone's too euphoric. That's when the rug gets pulled. So again, I expect to run up into the Fed, and then we'll see if we pull back. But again, earnings tomorrow on Apple too. So a lot to be seen. Have a great rest of your morning. I will see you guys tomorrow. Cheers.